Hello everyone, good afternoon and welcome to today's Trading the Markets Live. Now we're focusing on trading the US Open. Now we have been away for the last 2 weeks, so we are very much delighted to be back on a full-time basis once more. It's not a bad thing taking a break during the month of August. The markets are historically lighter. Some of the issues with that is with regards to manipulation in these markets. So although we get strong moves, we get... I have unmuted it. Oh, I think we're okay. Well, we should be okay anyway. Is that good for you? Yeah. Do guys let me know if you're having any issues with sound. I think everything's okay, but do let us know if that's not the case. All right, so we've got thumbs up. So I was just going back to the nature of the markets during the summer weeks, and we do like to take a bit of time off in August, and the major reason for that is with regards to market manipulation. The markets are obviously lighter during the summer weeks, and as a result we can get a little bit more manipulation than when we can during normal trading conditions. So those of you that have had a break, I hope you've had a good one as well. Now we're beginning to wind up to the end of the summer and going into September, which should be a very exciting period of time. We do have a significant number of potential moves in the pipeline. So without further ado, this whole session is all about mastering price action, understanding what's happening on price action, applying consistency when we trade these financial markets. It's probably that and discipline are probably, well, and patience really are the three major pillars on which to build your trading strategy. Now, as you can see, it's It's very, very different to your methodology. It's actually a way of navigating these financial markets, and what we plan to do during these sessions is to show you how exactly you can remain consistent when you trade these financial markets. Now, we have a process where we look to identify opportunities. We then go through a series of decision making with regards to execution. So we're talking about our entry price, how and when and what do we need in order to enter these markets. Again, from a very consistent perspective, we look for the same type of setups time after time again, and it'll just take you guys a little bit of time to get familiar with that kind of process. And then we go through a process of managing the trade. Now, pure and simply, we look to cut our losers short as quickly as possible, but we look to let our winners run, and that's the crucial I guess trading edge that we can assist you with. So we will be in for an exciting ride, no doubt, all with one aim, and that is to book in consistent returns. Okay, so without further ado then, if I could just take you through our risk warning. Please obviously do familiarize yourselves with the risks involved in trading these financial markets. We do take a very strong stance on discipline, and that's crucially important, so we never experience significant losses when we trade. And again, when we talk about discipline, we're talking about actually being disciplined with your own capital. Whatever capital you happen to be trading these markets with, that's what we want you to be disciplined with. Try to avoid giving the markets the benefit of the doubt, for example. It's not a consistent approach to decide to be in a particular market, whether you're winning or whether you're losing, and allow that market to move against you, even though it's giving you the signs that it's moving against you. So we're going to practice that level of consistency and discipline when you trade. So hopefully you've had an opportunity to familiarize yourself with our risk warning. Now, before we begin, let's take a quick review of potential market moving news. Now, we've got some significant news events as we go through the week, but we will just share with you Forex Factory for now, for today, just to show you is there any news events that can impact our decision making over the course of the day. And as we look through the times at which these news releases are current, and I'm just going to make sure we operate with the correct time. So it's 1:14 UK time. So we can now go back to the calendar, and that's a little bit better. We do have the correct time on the top right hand corner, and these are now the times at which these news events will be released. Now, when you have central bankers, and we're going in to a major news event on Friday, which I'll just scroll down so you can see it. It's the Jackson Hole Symposium. Now that's very, very important, because that's where we get all of our central bankers meeting to decide and to determine what their approach is with regarding to the state of global affairs, and also each bank's approach to interest rates, whether a hike is required or whether a reduction in those interest rates are required. So a very, very important event for the markets on Friday, and we do have a series of central bankers speaking in the build-up to that event. Has the potential to be quite volatile, potentially going into it, and we'll certainly see what comes out of that event next week when we trade these financial markets. So just to reiterate, as far as news events are concerned today, nothing of any major significance apart from Canadian dollar, central bank news events, and also with the FOMC affecting the US. So we have these central bankers speaking, but if I just get some news information up on that, due to speak about the economic outlook at the Johnson City Chambers of Commerce in Tennessee. So you wouldn't imagine that would have any significant bearing on the markets as such. Now, impacting the Aussie dollar, potentially we do have the chairman of the RBA, or the governor should I say, due to speak at the Australian Securities and Investments Commission event. So that has the potential to be a little bit of volatility there for the Aussie dollar. And to bring you up to speed, and we're like I said, we've taken a 2-week holiday, so we're in the process of getting up to speed ourselves. We do have the monetary policy meeting minutes coming out at 2:30 a.m., which has the potential to be quite volatile for the Aussie dollar. So a little bit of Aussie dollar to be aware of really going into this evening. So as far as any other news events are concerned, outside of the significant global events with regards to trade wars, whether it's with whether it's the tariffs that the US are putting on Chinese exports, there's constant wranglings between the US and Europe, certainly the US and Iran, and there's a lot of these macro events that are weighing heavy on the markets, let's say. So we need to bear those in mind as well. Brexit negotiations, for example. So without further ado, let's go straight into the trading charts. And like I said, we are in the process of just getting back to trading these financial markets. And we think what's always very, very useful is to do a bit of multi-time frame analysis to give us that little bit of understanding in terms of where we're at. So if you have been away from the markets for a period of time, do go through a little bit of a process that will allow you to take stock of what's happening. Don't necessarily jump straight in, of course, to trading without doing your due diligence. So we shall go through a process to look at those. Okay, so with that in mind, what I want to draw your attention to with each of these charts is the weekly highs and lows of some of these markets, and we can represent, as you're looking at the screen, the weekly high. Last week's weekly high was the 114.44, which is a nice bounce off the low, the 13.01, and you can see what's happened with price action during this time. So we've literally experienced a bit of a bounce to the upside. So with that in mind, what this could lead to is a potential opportunity for a little bit of a bounce to the downside. So we've seen this sort of U impression. I want to draw your attention to the 1547, which is a structural, which is a significant level of resistance preventing prices from pushing lower, and then support preventing prices from pushing lower. So we see this sort of bit of price action on all of these occasions, even very recently, until we got the confirmed break. So now we're on our way to the downside, and the market creates a low around the 1300 level and gets a little bit of a bounce back to 1440. So what we're looking to do with the euro dollar is to capitalize on a significant move lower. So we do expect this market to continue lower. What's a little bit concerning for us is if I put in a level in here, which is more of an intraday level. So I'm just going to change the color so you can have a better understanding. Is we've got the 1510 there or thereabouts, somewhere in between the 1510 and the 1547 is our key level of resistance for us to capitalize on a bit of a turnaround and for this market to move lower. So with all of this in mind, what is our opinion on the euro dollar? It's quite straightforward. We would like price to actually push back a little bit higher, maybe back to the 1500 level, for us to look to capitalize on a sell trade from a significant level of resistance preventing prices from pushing higher. And that's what we regard this particular area as. Now, the only caveat to that would be a break beneath today's daily low tomorrow. So if the market just closed a little bit lower and it was a bit of a normal close on that market and we got some extension tomorrow, we would definitely be looking for this market to push down to the 1300 again and could give us a little nice move down, with the idea that this level down here, the 1300, could give us the opportunity of be acting and behaving like a little bit of a magnet, just drawing price to it, and we definitely look to capitalize on that. But as things currently stands right now, we are going to refrain from getting into this trade, just because the clarity isn't there. And when we talk about trade identification, it's very important to obviously have a process in which you can select what we call high probability opportunities. And trading is quite straightforward for us in the sense that if we get an opportunity, we shall look to trade it without thinking if we regard it as a high probability opportunity. So we're seeing this pullback. So this doesn't really represent a great opportunity for us just yet. When we move on to the pound dollar, we can see the weekly high of 28.27 and the weekly low of the 26.61. We did have a nice move to the downside in the pound dollar while we were away on our holidays, which is obviously always the case. You'll always get one or two of those markets, but we would have definitely been looking to trade this over the last 2 weeks. Now we're getting a little bit of a bounce off the lows. So, and we do have this lower edge potentially providing a little bit of resistance. So in actual fact, we want these prices to push, if we can, close to the weekly high, push close to the 12800 level. And if we get a turnaround bit of price action in this, we could then look to sell it. It's just right now we're not quite getting the price action that we'd be looking for. And what would constitute a turnaround is having, obviously we've got a indecision candlestick where the market no longer wants to move lower. We've got a couple of candlesticks which are reversals back to the weekly high level. And now what we're seeing is our first attempt that this market is going to push lower. But we don't necessarily want to get in on the first attempt. We want to see some continuation. So we ask ourselves, does this market have the conviction that we need to drive it to the downside? And as long as that is a question mark in our minds, we're going to refrain from trading it. Plus we can see the pullback that we've been experiencing in the latter couple of hours. So obviously that provides multiple question marks over trading this market as things currently stand, in our opinion. So a little bit of patience is required with the euro dollar. And as you can see, we're actually just have 2 or 3 sort of bullish looking candlesticks, and we want to see the fade. We want to see the indecision kick in. We want to see the downward momentum look like it's going to continue before we get into it. And this is all a part of the identification of a viable trade opportunity for us. So the next one is the dollar yen. So when we look at these weekly highs and weekly lows, we can see what has been happening in the last 2 weeks, and that is not an awful lot. There's been very little conviction in either direction, although you would have to understand that the bias, as things currently stand at the moment, is very much to the downside, where we would expect this price to break below the 110.10 level. If we get that little break, we could capitalize on a really strong move to the downside. We're keeping, because we're trading the yen, we're keeping one eye on the global indices, and we'd expect this downtrend to actually continue, but actually only if we get a break below the weekly low of the 110.10. So we're looking for price to behave in and around this level. And the reason why we're exercising a little bit of caution, there's a considerable amount of strength in the dollar at the moment. And if this price pushes higher and breaks above the 111.43, it represents a structural failure to the upside above the weekly high of 111.43. So, and that's why it would then be a fantastic opportunity to buy this market around that level and sell it below the 110.10. So really we have about 140, 150 pips difference in this trade, and we're currently kind of in the middle of that. So unless this market determines which direction it wants to move in, we're going to apply the consistency of our approach, where we look to exercise a little bit of patience right now, be very disciplined with our capital, make sure we don't necessarily be jumping in and out of these markets during these summer weeks unless we get a really strong high probability trading opportunity. So biasness is to the downside actually, but only if we get a break below 110.10. So hopefully that gives you a strong understanding of that market. Moving on to the dollar Swiss. as you can see, we're effectively moving sideways. The weekly high is the 99.92, and the weekly low is the 98.56. And since what is effectively mid-June, we've been moving sideways. No major surprise. We had a really strong explosive move to the upside. We had a pullback, and then we failed to make new highs and just continued ever so marginally lower than parity, which is a level that we'd always take a strong focus on. And as you can see, it's provided resistance, preventing prices from pushing higher for any significant period of time. So again, we want to see breakouts above the parity 1.00 or below the 98.56 level to the downside. Okay, so that is the dollar Swiss then. Moving on to the dollar CAD. We can see here that if we take note of the weekly high and the weekly low, there is the potential to create a bit of a structural failure to the upside, which is why, okay, like the dollar yen, the biasness is at the moment to the downside unless we get a break above the 31.73. If that happens, we get a really strong move to the upside of 33.54. So that's what we're looking for. However, equally, a break below the 29.83 level would constitute actually a good opportunity for this market to swing lower. So I'm afraid to say with some of these markets, they are stacking up to be looking like really strong, high probability trading opportunities. Just potentially not yet. However, we do have the price action that we can see in the Aussie dollar. Don't forget there is some news events tonight and in the early hours of tomorrow, which have the potential to be quite volatile for the Aussie dollar. The major difference between this market and many of the others that we've just looked at is this market has now bounced back to previous levels of support. So this is, if we're looking to sell, this is very much the area in which we would be looking for this market to push lower. And a bounce off this low here would work quite nicely. So the market is determined with this really strong break to the downside that we are in a downward move after moving sideways for a long period of time with some downward pressure creating lower highs as this market moves lower. And it's really this level in here that we're looking for these markets to continue lower. So we can look to sell this market below the 73.02 level. However, today is actually the bit of price action which is all important. So tomorrow, if we get a break beneath this daily low, we could expect, especially with the news events coming out impacting the Aussie dollar, we could expect this market to continue lower. So this is a significant high probability trading opportunity to sell this market. However, we would prefer to do so below the 72.95. So we're currently at the 73.04. So we've only got a 10 pip move, but we do want to see if we can get a close in today's daily candlestick and we get a break beneath that low, would give us the really strong downward move that we'd be looking for. So this is exactly the type of setup we'd be looking to trade. We may just need a day or two just to ease ourselves into these markets, but we shall see, of course, how we get on with it. So we have the Aussie dollar with a potential sell trade around this level. So we'll come back to that shortly. If we look for an opportunity, we might be able to capitalize on one today, but the high probability trade is very likely to be tomorrow. We have a similar situation in the New Zealand dollar where the market was really struggling to break above the 66.39 level to the upside. We've started to sell off again today. We do want, and we have been selling this market on many occasions. This is again another confirmation that this market is going to move lower. It made the move lower, bounced off the 65.44, and now we're going to get hopefully the next leg to the downside. However, again, we want to see the close of this candlestick, and then the high probability sell trade exists, pushing these prices lower. Okay, so that is the New Zealand dollar. So the only difference between the Aussie dollar and the New Zealand dollar is the price action, and the reality of it being a high probability trade setup where price is bouncing off the 73.21 level, pushing lower. So from a structural perspective, this is a higher probability trade than the New Zealand dollar, although we do expect most of these to push lower. So just finishing off with the currency pairs, looking at the euro pound. Just want to draw your attention to what is a really strong 10-11 month sideways moving market. We even had the exact bounce a couple of weeks back off the 90.31 level, which corresponds with these highs back here. Now, with lots of discussions and negotiations effectively with the Brexit negotiations, anything can happen to this particular price action. When we were looking at the potential for this market to continue lower, we just backed off because the reality at these lows, for those of you that were joining us at that point, was the April lows, was that what we were concerned about when we saw the initial confirmation, and then we saw the next day this candlestick really reject the lows, and we failed to break below that level. It became very, very clear that we were going to get a little bit of a bounce, and the range bound bit of price action was going to continue. So we were discussing about this market pushing higher. It is effectively consolidating, so it is moving sideways, and in actual fact, if anything from these levels, we might suggest a little bit of pound strength actually kicking in. So, and that's what this bit of price action here could represent today. We've had the attempt. We're getting a little bounce back. It could provide us with an opportunity to sell this market beneath that level, but the real strong sell trade is below the weekly level, which is the 88.96, where we could see prices push down to the low 8800s. So definitely one to keep an eye on. So we'll keep an eye on this market, and we'll. I'm just going to take note of this low actually. So if we get a close, if this low here, the 89.39 is a daily low, then we'll look to sell beneath that level, 89.39, if we get an opportunity tomorrow. Finishing off with the last two yen pairs. When we look at the weekly bit of price action here, we can see a bit of indecision, really, a bit of sideways moving price action kicking in. Now this level in here has the potential to provide a little bit of resistance, preventing prices from pushing higher. So what we need to acknowledge is we've had a bit of a strong rejection to the upside. So really our attention can start to focus on looking to sell this market. We are running into resistance around these levels. So we're struggling to break above those levels. So again, tomorrow we might look to see if we can capitalize on the next move to the downside if we get some continued strength coming into this market. Now you can see the kind of this ATR, which is a 20 period ATR. It just calculates the highs and the lows over the last 20 periods, and it informs us of the volatility in that market. And as you can see, the volatility has come right off to sort of mid-August, and it looks like now we're just beginning to pick up a little bit, although there's a little bit of softening very, very recently. So that is the euro yen. This figure in here, the 0.99, means that there's a 99 pip move in each market over the course of an average over the course of the last 20 periods. So that fluctuates quite a lot. It can go, well, as you can see in here, a high of 146 pips in a day to an average of 71 pips. So we are currently at 99, so we are at the lower end of this particular range in here. And what that tells us is these markets are not as volatile as they could be, and of course we know that because we are trading these summer markets ourselves. So that's the Euro Yen. Potentially a break beneath today's low. We'll see what the range is on this market. It's currently only 41 pips, so there is potential for this market to squeeze higher and lower. We're not going to really force these markets to do anything. We just try to exercise a little bit of caution and look for those opportunities when they arise. And like we said, if those of you that perhaps just joined us recently, we have been we've taken a 2-week break, so now we are back to full-time trading again, and we're going to share all of our trading live trade rooms through our YouTube channel as well. So Euro Yen, just in this period of consolidation, we're just moving sideways. However, it may present an opportunity to sell tomorrow. And we can look at that price if we get a break below the 126.07. Okay. So moving on then, let's finish the currencies with the pound yen. Effectively, we're moving sideways. So this is very much an indecisive candlestick. Perhaps not much more to say than that. We do expect price to continue lower. We've had a strong move for the last 2 weeks against the British pound. No major surprise that has happened. I suppose the only major surprise really is that it's happened during the month of August. But you can get these moves, but these are very much lighter trading conditions. And over the last week, we've done nothing but really effectively move sideways. So what ordinarily we would like to see from this level is a strong pullback to previous levels of support. So if prices push back to the 143.97, then that would give us a fantastic opportunity to sell it at that point. So we've got to be patient, and we are seeing the potential for a turnaround. We are seeing that potential to occur. So let's see if it actually does or not before we take the next step to the downside. Okay, so let's just finish this kind of review, really looking at some commodity markets. This was the market that had a really strong move last week, at the earlier part of last week, where we had a really strong flush to the downside. Even on Thursday's candlestick, it bounced off the 1160 level, and now we are currently above our level of support and resistance at the 1183 level, 0.40. So we're currently above that level. Again, from a purely technical perspective, what we'd like to see is a little bit of a bounce back to this level, and look for an opportunity potentially to sell at that kind of higher level. So the way things currently are doesn't necessarily represent a strong opportunity just yet. If today's price action closes negatively or below the 1180.40 level, then we might look for an opportunity to sell at that point. So with a few of these markets, as things currently stand, just a little bit of patience is required today. Another strong potential market would be for us. In fact, I'm just going to take note of the gold market. And we're going to take a note of that low, actually, just the intraday daily low, 1182.77. So we'll look to see if we get an opportunity for this market to push lower. So just going back to the oil, I want to zoom out just so that you can see what's happened to the oil market over the last year or so. So we had a really strong bull trend. Those of you that have been with us a while now will have been able to hopefully capitalize on a few of these trades to the upside. But we've had something significant has now changed. We had the actual reversal beneath this level, the 60.01 level, and we've had a move back so far to the weekly low. And we've had a little bit of a pullback, not quite to the 60.01 level, but the idea is we might get an extra move down to the 63.59. Now I want to show you this over a longer period of time, because if we get a strong break beneath the 63.59, we'd be looking for a really strong move to the downside, where we'd expect this price to really push down to the low 60s, maybe early 50s, and it could represent a really strong opportunity to sell. And the reason for that is just the structure. We've kind of got a loosely formed head and shoulders there. We like to see symmetry when we talk about head and shoulders, so that's fundamentally quite important when we trade. But the real strong high probability level is the 63.59 to the downside. So that is the US oil. Now if we just zoom in so you can see this price action clearly, we've had a bit of a pullback, and certainly from an intraday perspective we'd be happy to look to sell beneath that level if we get that opportunity. So we're going to add crude oil, and that is WTI. So we'll add the crude oil where we're looking to sell this market below 65.34. So we've got a few of these markets which we'll put up on screen now at the same time, so you can see how they're all behaving. And I suppose just to finish off in the S&P, there was a lot of strong rhetoric today from your news networks to say how, you know, that there's a lot of strength coming back in to the US equities. Now it'd be interesting to see how strong that sentiment is. Certainly they are positive for the day, but will be interesting to see, and we'll see the US equity open at 2:30 and see how this market is really fixed. We have some developments with regards to the relationship between the US and China regarding the tariffs that the US are planning to put on Chinese exports, something to the tune of 16 billion. So that will have impacts on these global markets. Okay, so we'll just keep an eye on the equity space just for now. So what we'll do is we'll go through some of these and we'll see what opportunities may exist. What I'm going to do is put in some intraday levels. We'll amend these very, very shortly. So I would like to review this market potentially in the bottom right hand corner. In addition to that, let's get the gold market up as well. So broadly speaking, what are we looking to do? Potentially look to sell beneath the daily low. If we get that complete rejection, we might look to capitalize on a move lower. So we put this into the top right. So those are the two markets we're looking to sell. The US oil roughly below the 65.30, and sell the gold market below the 1182.55 level approximately. So we go into those in a bit more detail shortly. Let's get the euro yen up. So we might split the three currency pairs into three. And again, we'll just keep a strong eye on that level in there, approximately the 126. Well, it's the 126.07 to be precise, but we'll come back into that shortly. The euro pound has the potential to sell beneath this low if we get some follow through on that market. So let's put that in the middle there. And the final market was the Aussie dollar. Okay, and the 72.95 is the level that we are looking for opportunities to sell this market. So I'll just do a little bit of rejigging. There you go. Okay, so this is our, broadly speaking, this is our trade plan. As you can see, we may need to be a little bit patient with some of these markets. These are certainly the levels that we're looking to trade. Now, maybe today might not be the best of days to be getting in and out of these particular markets, but we shall sort of scrutinize and just focus on each one in a little bit more detail now, just as we get our trade plan together. So we're looking at this level to see if we get the continuation. Let's see how this market's behaved in a shorter term time frame. So this is why this level is really quite important for us. We said the 72.95. So we'll change that level so it's precise. That's why if we get this rollover to the downside, we might look to capitalize on that opportunity. So we keep a close eye on 72.95. And again, when we trade these markets, we need to have a directional bias, and that's for us to sell the Aussie dollar. We can then sort of, that presents us with the opportunity that we're looking to identify. And then, of course, we can then go through a bit of a procedure with regards to execution. So what time frame do we execute the markets on? Where do we place our stop loss? All of that will need to be considered to be able to execute trades in this market in a very consistent manner with discipline, of course. So the euro pound next. We're getting a really strong bounce off that level. So the low is the 89.39. So 89.39 is the level. And all we're getting is a bit of a bounce back. So that's why it would be dangerous to trade this market. Not dangerous, it might still give us opportunities, but it's not necessarily. I'm going to put another level in here which we can easily identify as an opportunity. If we did get a bit of I suppose a bit of price action which consisted of a little bit of exhaustion preventing prices from pushing higher, and we got a little bit of a rollover to the downside, it might give us a short-term opportunity in that to see if we get the little push down to the downside. And it would potentially give us the profitable risk reward to get into that trade as well. So somewhere in and around this level, we might look for opportunities to sell this market if we get those opportunities. So we'll have to wait and see. A bit of strength really. So euro yen. We do want to sell beneath the daily low, which would be the high probability trading opportunities. Let's go into the 15-minute time frame. And the level we had was the 126.07. And we're currently grinding lower, but that would be a strong structural break below. But we might need to be quite patient with this market really as things stand. Okay, so last two markets then for our trade plan for the day would be the gold market. So so what are we looking to do? Let's go into the shorter term time frames. This is what we look to do that will allow us to stack the odds in our favor, go into smaller time frames, look for those opportunities there. intraday level of support, just in and around these highs, which as you can see, these lows. So the gold market for us, we want to sell below the 1182.77. There's the 1182.77. So really what this would constitute a break beneath this level. And we need to get a little bit of a push higher really to create a failure to the downside. That would be your first failure, which is the 111.85.10. And that would act as a bit of a magnet, pushing prices lower. And then if we got a structural failure of this level in here, and perhaps tomorrow we might get that opportunity to trade below the 111.82.77 level. So within all of these markets, we've got really, we do our analysis, we create really strong structural opportunities, and we just simply look to trade them when the opportunity arises, and that's where patience comes into your trading strategy. Let's have a look at this on a 15-minute time frame. So the level to the downside for the crude oil market is a 65.34. It's just a little bit higher than these current prices. 65.34. There we go. So now what we have is a trade plan consisting of 5 markets, currently up on screen, and what we're looking to do is to sell the Aussie dollar below the 72.95. An opportunity may exist now actually as we're looking at this market. Oops, excuse me. I'll come back to that in just a second. So let's have a look at this. So this is the level that we'd like this price to bounce off, and it looks like that's what we've effectively seen. So now we want to trade the structure. So we've got the bounce off the level. So this is the next phase, which is the execution phase. So how do we've identified the opportunity, potentially look to sell off the 89.55, and in our experience, the next phase is, right, well, how do we actually execute a trade? And for that, we work with market structures. So we can see that there's a bit of support of price in and around this level. So what we want to see is this market potentially attempt to make a new high, suddenly fail, and then if we got the structured break below that level, then we look for this market to really move to the downside with strength. So we've just got to trade the structure now, which is the execution part. We want to get that entry consistent with our ability to navigate these markets based on support and resistance, our understanding of price action. So if this level here creates a bit of a low, which it looks like it might do, kind of corresponds with these levels over here, then that would work well for us. That's what we'd want to see. Potentially attempt for this market to make a new high and fail, and that's the beginning of a structural failure or a reversal. And then if we get that structural failure at the 89.49, we'd get a strong move to the downside, and that's what we'd be looking to trade. So any questions on all of this, guys, don't hesitate to post into your chat box, and we'll see if we can capitalize on some of these moves. So we need to be super patient with the Aussie dollar, super patient with the euro yen. Though we're not too far away from potentially seeing that break. We're only really seeing slow grinding price action pulling back actually in the gold market. So yeah, we'll just continue to monitor it, and if the opportunity presents itself, then of course we'll look to get into it. 65.34 is a strong level of support, as you can see on a 15-minute time frame. A break of that will become a no-brainer sell opportunity, pushing prices lower. Okay. Apologies, Scott. I just think that sorry, I was just trying to get the trade plan sorted out there, so apologies. You've said the dollar yen outlook, please. Yeah, I kind of did go through that actually. We can have a quick look at it. So dollar yen, we did stress and that we're actually currently in a little bit, from a technical perspective, in a little bit of a downtrend. So the definition of a downtrend is a series of lower highs and lower lows, and that's what we're seeing. This is your lower low, just in there, and lower highs. So technically speaking, this is in a downtrend. So if you asked us what is our bias in this market, it's to push these prices lower. Now what we've identified already is a break above the weekly high of the 111.43 is actually a structural failure to the upside. But at the moment, price is very much consolidating. It's very much moving sideways without much liquidity. So quite happy to apply a little bit of patience really with the dollar yen. So that's just effectively moving sideways. Okay, so I am just a little bit conscious of the time. Do you think it will bounce above support? Oh, sorry, you're looking to sell it. Well, we'd be looking for so you're looking to sell, yeah, so the level that we'd look at to sell from a high probability perspective. Now this might sort of act like a little bit of a magnet, really, Scott, pulling prices back down to 110.10, but really the strong high probability opportunities is below the 110.10 level. So that's what we're seeing here in the dollar yen. So do we think it'll bounce above support? Yeah, it very much has the potential to do so. So if we just regarded the 110.10 as support, certainly if we get a break above 111.43, but this sort of goes back to your overall philosophy where we don't mind whether this market strengthens or weakens. We want to be able to buy it or sell it. We don't get emotionally attached with any of our trades. So we want price action to determine what we do effectively, and that's the uniqueness of trading the markets technically, and something we're strong advocates of. Yes, markets are driven fundamentally. Yes, sentiment is a huge driver behind financial markets, but what allows us to get in and out in a coherent manner and a consistent and a disciplined manner is our technical approach, and we're strong advocates of that, of adopting that type of approach. So Mike, it's fantastic. Okay, great stuff, Mike. Pleased you're benefiting from it. That's what it's all about. And Scott, you covered everything in your, yeah, okay, great stuff. So I've already covered all of that. So guys, I am conscious of the time. So if there is any more questions, do feel free to post them into your chat box. What I'm going to do is get up our trade plan really one more time, and you can see why we're not really interested to jump in to the euro pound unless we get a break below the 89.49 level. We've had a bounce off that 50 level, which is a psychological level. The 50s and the 00s are psychological levels, and you often get bounces off those. But what we're not interested in doing is necessarily buying above the 89.55. So having that directional bias where we're looking to either buy or sell obviously really assists traders with then trying to focus on the best possible opportunities trading the markets in that direction, and we're strong advocates of that as well. Okay, so a few of these markets are setting up. The euro yen is not too far from the 126.07 level, only 7 pips away. We're still only 3 or 4 pips away from making a low in the euro pound, so a little bit of patience is required on that. The Aussie dollar, we expect it to sell off below 72.95. Again, we're only 10 pips, but it's just literally moving sideways. We need to see a little bit more actually from the gold market and the US oil. Really strong level of support, as you can see, and if we get a break of that to the downside, it could give us some fantastic opportunity for the day. Now, ironically, we might be looking for opportunities to sell. In fact, they're all potential sell trades as things currently stand. So a bit of dollar strength, a bit of pound strength, and a bit of yen strength, and a bit of weakness in the US oil market. So we definitely have a few of these really interesting opportunities to capitalize on. So I am very conscious of the time, guys. So we have hit our hour, and we do have traders waiting for us in our trade room at the live trade room. So I do want to give you the opportunity, if you are interested in our approach and you do like the approach that we adopt, we want to make trading education and your ability to navigate these markets as profitable as possible without big fees. So currently what we're looking to do is to give you the opportunity to join us every single day, and only really apply a very, very tiny fee of $9.99 per calendar month. And all that does is just contribute towards the infrastructure behind you being able to join us. So if you think that's agreeable and you would like to join us here at the live trade room, you'd be more than welcome to join us. We're actually also giving you a 2-week trial as well. So that's completely free of charge. And if you do want to continue with us, it is as little as $9.99 per calendar month, and without any extra sort of stipulations or anything like that. So it's very, very clean, very, very straightforward. And hopefully you get to know a lot of our other traders as well, maybe during the capital growth webinars or the daily trade watch, whatever the case may be. So on that note, I'm going to let you guys go. Please do read the information below. Do like and share this particular video. We are delighted to be back, and we're looking to build on what we've already started, which is to effectively create the world's largest group of profitable traders, which is something that not many trading educators have the potential to state. So we are delighted with what we're doing, and hopefully you can be a part of that. So do read the description below. Do sign up for our 14-day free trial, and we'd be delighted to see you on the inside. So for everyone else, we do have traders waiting for us over at the live trade room now, so we're going to switch across to there, and we should look forward to seeing you all soon. So same time tomorrow. We do, just to let you know, we will be available again on YouTube at 8 a.m. tomorrow morning to trade the European Open, and again tomorrow at 1 p.m. to trade the US. So we do hope you can join us for that. On that note, I'd like to wish you all the best for the afternoon, and those of you that can join us in the live trade room, please do so. You can get instant access set up for you straight away, and we'll see if we look to capitalize on some of these moves, like the euro pound, for example, and potentially even the gold market. But we'll just be monitoring these markets closely, and like we say, we only trade these markets when we get the high probability trading opportunities. We're not that eager to be jumping in to markets without a real structured plan behind our trading. So thank you very much, as always, for joining us. Do take care. I will just finish this presentation before I switch across to the live trade room, but do feel free to connect with us. Like I said, subscribe and like and share this particular video. You can join us in our YouTube channel, which is at the live trade room, all one word. And you can also connect with us through Facebook, Instagram, Twitter, and LinkedIn. So we do look forward to seeing you all soon. So from everyone here at the Live Trade Room, take care, and we shall speak to you soon. Bye for now.